Good morning. Good morning. Welcome to Lunar Beaches Crypto, where we ride the waves of the crypto market all the way to the moon. It is Wednesday, August 14th, 2024 at 5:51 a.m. Central Standard Time. Sorry. How you doing? How's it going, folks? Seems like Tuesdays are not good days for me. I can't remember the last time I did a stream on a Tuesday. But that's all going to be changing here soon when Blackie Chan joins the show. Be a new show. Good Morning Crypto. Coming to you soon. Coming to a theater near you. Good morning, Justin Eubanks. Lurking, getting the kids ready for the first day of school. Oh, they're just now starting. They're a week behind us. All right. So today we've got CPI. We've got inflation data. Lunar Beaches Crypto just said good morning to me. Hey, Blackie Chan, you're logged in to the Lunar Beaches account. That's funny. So, yeah, we've got CPI inflation data today. Good news is good news, I think. It seems like good news is good news. So maybe we wanted to see this inflation coming down, and not going back up. So in order for prices to go back to the upside, inflation data coming in at 8:30 a.m. Eastern Standard Time. So let's be ready for that. Rockinos, good morning. There he is, Blackie Chan. Good morning, good morning, good morning. All right, let's get to it. Let's get to the charts. Who's clicking buttons today? What do you mean? What buttons? Blackie Chan is clicking buttons today. All right, so we have this uptrend going on here. The only problem is we have these two equal lows down here. So we could get some trickery from the market makers today, coming down, taking a stab at the liquidity that rests below here. Of course, with the equal lows, you know that there's going to be stop losses stacked down here for longs. And then I would hope for a move to the upside for continuation. Continuation today. That's what we want to see. Continuation. Word of the day. We did not get it yesterday. Instead, yesterday was well, actually, we did get a push up yesterday. It came in a little late, so around lunchtime. So we want to see some continuation today. If we can get a measured move out of this triangle here. See from where we broke out from. Actually, I kind of tend to, which is interesting, the apex, which is the middle point of a triangle, lines right up with that New York Open. So I really like that. Something I've been playing a lot off of is the New York Open. Depending on what time of day it is and all that good jazz, if we come down below the New York Open, which the New York Open is just the opening price at midnight. If we come down below the New York Open during the New York pre-market, and we are coming down for an area of liquidity as we're coming down below it, that typically I would go long if it's coming down below the New York Open, hitting it an area of liquidity. I would be going long from that area of liquidity, putting my stop loss below a local low, and then shooting for either the high to the left or the measured move of the breakout. The measured move of this breakout would get us to a price point of $64,250. I'm looking. Maybe it'll come down and sweep the Asia low. We'll see. But we want to see a reversal down in this area right here. So anything in this area is where I would be looking to go long if price is to come back down into it. Because I want continuation. I expect continuation, not financial advice, but it's what I want, and it's what I need. Is UTC 4 Eastern time? Also, what indicator is telling you each market open? I use an indicator called ICT Kill Zones, Sessions, and Indices by VinceFX. Is UTC 4? Oh, can you see that on my screen? UTC 4 is Eastern time. Yes, that is New York Standard Time. I keep my charts on New York Standard Time. I don't even keep them on my time because I'm weird like that. But that's when all the price action happens, is off of New York time. So that's what I like to keep it on. We are getting a back test here. I like to see these 3 green candles pushing to the upside. Wouldn't hurt to probably take a long off of this resistance that has turned into support. I probably would aim for that New York Open though. And then from there we just manage our risk. 64,262 is our measured move. And then get us a little bit below this low and below this fair value gap. Now this is a wick. Let's see, fair value gap right here. So there. That's all I want to see. That's what I want to see today. Some continuation. Now we can get that. Or hopefully, come on, if it can click. There we go. Or maybe if we can hold this down sloping resistance here, turn it into support, then we can possibly get a bounce off of that. So let's see if we can hold this as support. If it does come down, I mean, I've seen it happen more times than not where this will come back down below the New York Open. I mean, kind of have been trading all around it. We also, we can look at oscillators, see what they're giving us as well. So with these coming to the upside, and we got equal lows right here, if this came down, took out the equal lows, let's go up to a higher time frame. Let's go to the 1 hour. The 1 hour might not give it to us. All right, so 13. We'll go back to the 15. Let's see. If this came down, what we would want is for price. So this is that low right here. To come down, let's see. So yeah, that would give us a bullish divergence. Come down here. And then bounce. Come down here. We would want it to hold up, but it's got to be higher than this low here. So it could come down here and then bounce like this. And then maybe it gets pretty into the overbought territory, and then we start putting in a bearish divergence. So I like to go ahead and try and set charts up like that just so I can get an idea of something that I'm looking for. And if I get it, I'll take it. I'll take that trade. Bear side, I mean, it's basically just if we are to break down here and then come back and retest and get rejected, then there's your bear case scenario. That's what we don't want to see, though. We want higher. We want higher. I want higher. I don't know about you guys. I want more excitement in the market. More excitement would be fantastic. More excitement. So yeah, I'm looking for a continuation today. We did get the break of the consolidation range, and look, we're starting to fall below it. But where's it going to? That New York Open. New York Open, we've got equal lows that are, it's also the London low so far. So I would not be surprised to see price come down, sweep these lows, probably even take out this low here. Let's go ahead and throw up a fixed range volume profile. So we do have a value area low right down here at $60,506. Lose that, and it's a long way down. Long way down. All right. We do still have equal lows down here, and I still have an alert set for those equal lows. Here's our point of control. If we lose that, there's not much here below us to catch our fall until about 59,500. So the range is basically 60,500 to 59,500. So maybe we can get a little poke below the New York Open, get a push up, and perhaps it stalls. So we would be looking for overbought. We already are a little bit overbought. So maybe we won't get continuation today. Maybe we'll get continuation to the downside, which I don't want to see, because just as we like to see price come down below the New York Open and shift to the upside, we've already done something where we've gone be above the New York Open. It could be shifting to the downside. So this could be our play today as well. So we have, if we break this low and then come back down, back test, all the volume is right there too. So that could be a short play. Hey, we can play both sides of the market. It is what it is. Then maybe it comes back up, hits some kind of resistance. It comes back down. It comes down, and we get a sweep of these equal lows. It's not what we want to see, but how many times have we seen this little pattern right here? What do we call this? We call it a BART. We just saw it right here. Just saw the same pattern right here. I can pull a bars pattern, take this, shrink it up. Just going a little crazy. Shrink it up. There we go. And it's like the same thing. Same type of deal here. Push up, pull back, come up, fail, reject, come down. So hopefully if we do push down, then we can get a reversal and start trending Thursday and Friday. Start trending higher Thursday and Friday. So those are the ideas. Those are the ideas. If this, then this. If this, then this. If this, then this. Really hoping, and this is why you got to look at both sides, because I was started off pretty bullish, but now I'm like, oh, we could be kind of bearish. So it all depends on what we're going to do below here, below the New York Open. If this thing comes down and just barely tags it and moves to the upside and leaves these lows here, and we leave these even further behind, and we start putting in bearish divergences, yeah, that's not what it's not, that's going to tell us we might need to be careful. See if we can get bear divs in here, right? Come up, and then we've got equal lows, and then just lows, lows, equal lows. So be careful. Always use a stop loss. And yeah, oh, we're coming below the New York Open now. All right. So in an hour and 22 minutes, we have inflation data coming in, which CPI, especially considering where the market's been lately, CPI will matter today. It will have an impact on the market. This is kind of, I kind of want to see this pre-CPI. I want to see us take care of the lows first. Maybe the CPI will be good, give us that little pump up, and then put in the bear divs, and then we can short it. So ride to the top, short to the bottom. There we go. Let's see. That was beautiful. I think I need to start assessing it like this. I wish I would have looked over here so I knew what you were talking about. But thank you, L. Jones. Maybe Band-Aid. Maybe a Band-Aid. Morning, all. Good morning. Good morning, Blackie Chan. Didn't we expand a lot yesterday? I don't know what you would consider a lot. When you compare to Monday, we increased 1.5% from Monday's high. So I'm not entirely sure, but the fact that we took out Monday's high and not Monday's low does leave Monday's low as a possible target for the downside. So just be aware of that. We also have this consolidation range right here. So start digging into that, and then I could definitely see us coming down and sweeping these lows. It is what it is. The CPI should make a red day, I guess. Maybe. There's almost always a false move with CPI. Just be careful today. Yes, exactly. Best thing to do is probably CPI is at 8:30. Best thing to do is probably wait until after market open, like 30 minutes after market open. It's like 10. Because then you get enough time to see price action develop. Let the market makers do their shenanigans, where they just trying to whipsaw you out of the market, take all of your liquidity, and then just, liquidate. But yes, there is almost always a false move with the CPI. What else do we have? Let's take a look at the Dixie, see what it's looking like today. Whoops. Dixie's been down. It's trading below the New York Open. It already came up and pushed down. Let's zoom out. You got to zoom out with the Dixie. So it's sitting at the lows. So, and it's got a lot of room up here that it can get to. A lot of liquidity that it can get to, and putting in kind of a W pattern. I could see it come down lower first, and then, well, I was trying to see if it would put in a bullish divergence. It might. It might put in that bull div, even if the thing is, even if this is flat, if this stays up higher, that's going to be a bull div. If it comes down below, it's still going to be a bull div because there's still going to be a divergence on the support side of the market between the price and the oscillator. Flat is still kind of weak though. A flat divergence is going to be kind of weak compared to a more steep divergence. Now this is the RSI primed, so it's going to be a little different. This one can, the standard RSI does have room to push down. So I can see this coming down a little bit, this coming down a little bit, but now we have this putting in a higher high, while this is putting in higher low, while this is putting in a lower low, and that gives us that bullish divergence, standard bullish divergence. We've got lower lows on our price, higher lows on our oscillator. Bullish divergence. So if the Dixie is inverse correlated, now this is the 4-hour chart, so we'll see. We'll see how this plays out, because this would take us into Monday, which means we could see a lot or some downside on Bitcoin because they are inverse correlated. So if the Dixie comes down, gets this push, starts getting this push to the upside, then Bitcoin would likely start seeing a push to the downside. What is this? Get off of this. I need to look at that in a sec, though. I forgot I did all that. Hold on. I got to get to the right chart. So, yeah. Bullish divergence on the Dixie. We'll see. So, if Dixie down or Dixie up, Bitcoin down. Typically. That's not always the case, but typically that is how it goes. Look, we just barely came down below the New York Open and got pushed back up, closed above it. Still, oh man, I like entering at the New York Open sometimes, but I still see this liquidity sitting right here. Of course, yesterday I didn't enter along because it never came down to sweep these lows, these equal lows. I was sitting here, I was just waiting. Kill zone, is it going to come down? Sweep? Nope. All right. London kill zone, is it going to come down to sweep? Nope. It just kept going. So, missed the move yesterday, but, not making money is better than losing money. You know what I mean? But now we just wait for just waiting for CPI to drop at 8:30 and give that some time to work itself out. Wait until market open at 9:30, see what the market does for the first 15 to 30 minutes, and then go from there. Now, what happens between 8:30 and 9:30 should give us a pretty good hint at where the market is going to go. So, Just gotta just pay attention. This is the time to be paying attention. So good thing you're here this morning. Congratulations. Hit that like button for yourself for being here. Thank you. Good morning, crypto. Take a look at the SPY. What is this? SPY's been jamming along with the Dixie, so that's good. Let's back this thing up. See what I've been thinking. I already know. Gotta turn this indicator off. There we go. Oh, there's that push up I was looking for. It's already starting. So what I'm hoping for is not this. I'm hoping that this thing doesn't come down, but we'll see. We'll see how it goes. It's getting a little close, but yeah. Maybe we can see some continuation in the SPY. This did not break down here, so that's good. That's good. Dow Jones is still pushing to the upside, so getting a little bit of reversals here. Now, we start seeing more expansion. Watch out. RTY. This is where we really want to see some expansion, is in the Russell 2000. Because these are your small cap companies. And I hate that we just swept the high. So with this, I'm just waiting for it to come back up to here and break 21,000, or sorry, my bad, 2,145, 145, 2145. If it breaks that, closes above it, good. That's what we want to see. But if it comes up and it rejects it, it might be a long way down to come down, sweep these lows, and the market's just done. But we still have a chance for this to continue to the upside. We're still putting in. The good thing is that even after that crash, we're still putting in higher lows and higher highs, okay, on the Russell. It's exactly what we want to see. It says higher lows and higher highs. So that is still an uptrend until that trend is over, until the end. Hola, French toaster. What's going on, man? Hope you are doing well. So more expansion in the Russell small cap, basket of small cap stocks. The reason it is important is because if the Russell pushes to the upside, then that is showing that we are in a risk-on environment for riskier assets such as small caps and crypto. So if we get a push up, liquidity injected into small cap stocks, we can expect liquidity to start flowing into crypto as well. Not 100% of the time, but hey, it is a good sign, I will say. Good sign. So right now, we're just wanting to see continuation. Everything else, I mean, there's nothing really. What's on? Let's see. NOT is up 9% today. It's getting a little push, a little bit of a trying to break out, get stalling out a little bit. Let's go to the 4-hour. NOT. Oh yeah, look at that. Fake out, breakout territory. Coming in hot. There we go. All right, so we're above the 50 on the 4-hour. Let's go to the daily. Can't see it there. Let's go back to Bitcoin. I don't know these alts too well. So we're still below the 50 EMA on the daily, So we definitely want to get above that. We are above the 200, which is good. We did get back above that. That is the one that we have been struggling with, is that 200 daily EMA. So it's a good thing. Good to see us get back above that. We get the pullback to kind of test it for support and get into this, close this fair value gap up, and then start pushing back to the upside. So we really want to start seeing, we really want to see a daily close above this high here at 62,000. Let me lock this in so I get it as accurate as possible. 62,766. This is per the Blowfin chart. Let's go ahead and go over to the Coinbase chart. Look at that same spot. We can see that's 62,755. So just wanted to make sure I get to a spot price as well. So yeah. So we got the break above the 200. We are sitting on top of the 5 and the 13, which is good. That is showing us some strong momentum, especially if we can start pushing higher. I would like to see some trend continuation today. 4 hours looking pretty good, sitting above that 50 EMA. I would like to see that dip possibly into 60,200 just to kind of sweep these lows and get into this fair value gap that is sitting right here. And this is a 4-hour fair value gap. So can't really see it. Let's make sure we can see it. So 4-hour fair value gap. Like to get into that. We also have, I forget what this level is here. I want to say it's a psychological level or something. It's trader's reality indicator. It's got different levels on it. I don't typically use these, to be honest. But sometimes if they're in the area as far as these levels, maybe I'll make a play off of them because, hey, they tend to work. So why not? I really want to put this back to regular, green, rectangle. All right. So yeah, we do have the 13 EMA down here as well. So, but yeah, if we can get a push off of that 5 on the 4-hour, that'd be nice. Let's go down to the 5-minute. Yep. So we're getting below the 50 EMA on the 5-minute, which is fine because we are kind of expecting for us to come down, sweep these lows, these equal lows, and yeah. So we could get a couple of fake outs. So we've gotten one fake out on the breakout to the upside, fake out, and now we'll see if we get a fake out to the downside as well. We got the 800 EMA on the 5-minute coming right up to that level down here as well. That is right below the low here. So maybe we can come down and sweep these lows and get a nice bounce off of that 800 EMA right around that 60,200, $200 level, $60,200. So if price comes down to there, I will, and we have these EMAs sitting right here at the same time and this level right at this fair value gap, sweeping the lows, then yeah, I will be taking a long here and putting my stop loss down here at this low. This low right here. If it's going to come down here and take me out, then it's going to go down lower. So, and then I'll just aim for that. Is that the measured move? Oh, no, that's that high over here to the left. We do have resistance 2 up here, which is probably, no, I think it was like 64 something for the measured move. Let's go ahead. This is a different chart. That's why let's go for the measured move there from the breakout. I still take the measured move from the breakout of the triangle, even if we get some fake outness. even if we get to fake out. Now we could also turn on the volume. See our spikes in volume. Got a little bit of a spike here, but we got a big spike right here. Volume right here. So that is showing good support there. A little bit of a spike in volume here, so that's showing that as resistance. So yeah, I think this is going to be the correct structure on this, correct pattern. Good morning, David from Amsterdam. Good morning, Amsterdam. Goldie Crypto, Reapers, Creepers. Good morning, good morning, good morning. Good morning to all of you beautiful, beautiful people. Thank you for joining me today. Could go up, could go down, but we are prepared all around. See what I did there? All right, I'm going to show you guys something. It's going to be super brief. I'll let you guess who this is for, but and that's going to be the show, guys. I'm trying to keep it low key, okay? Thank you guys. Thank you all for stopping by. This is soon. This will be a little bit more of a professional show. Is this thing? There we go. I say a little more of a professional show, but it's gonna be a little bit more of a show. I'll do more of my trading stuff. Damn, I knew Alex was short, but that's a bit too small, no? Oh, that's funny. I gotta get ready for work. Yeah, more of the trading stuff, more of the charts. I mean, we'll still have charts on the show, of course. I mean, that's gonna be my primary focus. Oh, look at that, starting to curve up. You still didn't sweep the lows. You're faking me out, bro. Anyway, I gotta go. Love you guys. Thank you all for joining me. Get ready for Good Morning Crypto coming to a theater near you. Yeah, thank you for joining. Everybody have a super wonderful, magnificent, amazing, radical day. Ride the waves. Peace out.